Hi everyone. Today on the show Market Makers, we have with us the management of Pune-based engineering and construction company Vascon Engineers. I extend a warm welcome to Mr. Santosh, CEO of the company, and Mr. Somnath, CFO of the company.
Hi. Hello.
So, Mr. Santosh, could you please provide an overview of Vascon Engineers' business model and its core business segments?
Sure. So Vascon Engineers is now almost a 40-year-old company. It was established in 1986. And since then, we've been operating in two segments primarily. The real estate segment in Pune, we are very established, reputed builders in Pune, Coimbatore, and Goa region. And we've also been operating as contractors, EPC, for the building segment across India. And on that part, we function in most of the states in the country. Over the last few years, we also have added a third segment to our company, which we view as a non-core segment, which is shareholding or ownership, 85% ownership of a company called GMP Technical Solutions, which are into clean room manufacturing as well as BMS and HVAC systems. So that is also an entity that contributes to the revenue of the company. As it stands, roughly about 60% of our revenue is coming from the contracting division or the EPC, where we undertake projects for private as well as government sector on design and build basis for constructing buildings. We are not into any other form of infrastructure. We are primarily into all kinds of buildings. About 15% of our revenue in the last couple of years has come from our real estate division, which is now undertaking a lot more projects in the Mumbai-Pune region. And so we expect that percentage to increase going forward. And about 20-25% of our revenue comes from GMP, which, as I said, is an entity which is 85% owned by Vascon. And so, yeah, that is the contribution of the various segments towards the top line of the company as of now.
Okay. So as you said, Vascon has been in the business for several decades now. What has been the core competitive strength of the company?
So I think our strength is that we are all a bunch of, passionate engineers, starting from the top. Most of us are, hardcore engineers at heart. And we therefore take a lot of pride in engineering solutions for the building sector. We have our in-house design strengths. We do not bank on outside consultants as much as most others do. And therefore, we are able to optimize, economize consumptions of materials within our buildings. And since we operate both in the real estate and the EPC division, so they sort of complement each other, we learn from both divisions mutually within the company. And we're probably one of the few builders on the real estate side who execute their own projects. I mean, there are very few in the country who actually build their own project. So I think we take a lot of pride in not outsourcing. When we are delivering a house to the customer, I mean, I think the first thing is we ensure we design it, engineer it, and execute it the way we want, rather than outsource these processes, which most real estate players end up doing. So I think that is our strength, that we are engineers. We're not just builders. We are hardcore engineers with the entire bandwidth of consulting, designing everything in-house. And so we bring all of that to the table when we get a project.
Got it. Excellent. And if I look at the financials, there has been an orbital shift in company's revenue since FY21. So what has triggered this kind of growth in the revenues?
See, eventually, if you look at it, is not typically the orbital shift or something like that. We are very much poised to take a growth. Since 2020 onwards, our order book has been revamped and consolidation has been done very nicely. But unfortunately, 20 and 21 is a different period where most of the industry got some kind of setback, some kind of underperformance has happened during these 2 years. So what was supposed to be continued from 20 onwards, that has been triggered in the last year. So it is not. And the another part is that what Mr. Santosh also told you some time back, that we are a combination of the both EPC and real estate. And always real estate is governed by some accounting principle, the Indian accounting standard. You can recognize your revenue on the post-completion and all these things. So every year by every quarter, you cannot have that same kind of trend is applicable for the contribution of the real estate segment is concerned. So there will be some kind of sinusoidal effect is visible in terms of the real estate revenue is concerned. But if you look at EPC, barring this, the typical pandemic period, it is a very consistent and steady growth is being both in top line and bottom line is been visible for the EPC segment. So yes, it looks like prima facie orbital, but it is not actually orbital. We are very much poised for the growth and continued this growth for the way forward also.
Got it. Understood. And, when I look at the results presentation of the company, it mentions that you have better margins compared to your peers. So, what helps you get this better margins?
So it's twofold actually. One main reason, as I mentioned, is our control over our internal processes as engineering, as an engineering company. So what do I mean by that is, as often as possible, we try to take projects on a design and build basis. And even the government sector is, putting up a lot of projects in this mode, which is called the EPC mode, as far as the government is concerned. Over here, we control the design processes internally. And therefore, we are able to optimize certain designs, which the benefits of which come accrue to us as a company, which many other competitors do not have that internal process to be able to optimize consumptions of materials within the guidelines given by the architect. So we take a lot of pride in doing that. We have an entire back-end team working on the nitty-gritties of the drawing. So we think half the battle is won on the drawing board, and then construction is only the other half. So we focus a lot on the drawings rather than just execution at site. And the second aspect is, of course, stringent controls on your margin. We are not large, extremely large as of now. And so it helps that we are able to, have complete control from the head office around each project. And we are able to monitor the MIS is extremely detailed. And therefore, we are able to course correct if anything we feel is going wrong immediately. And so with these two aspects, we are able to confidently say that as of now, we do have a much better grip on our bottom lines than most people do in this industry.
Right. Interesting. EPC, or engineering, procurement and construction, is a term that is commonly used in the construction industry. Think of a project like constructing a new building or a solar power plant. EPC companies work like a one-stop shop and do the entire job. In this term, engineering means the EPC company figures out how everything should be designed and put together. Procurement means they buy all the materials and the equipment needed to complete the project. And finally, construction is when they actually build everything according to the design and using the materials procured. And, on the EPC side, what is your current order book and its executable period?
See, currently our order book is almost 2,500 crore. Currently, we are holding that kind of order book, and typically the execution period between 30 to 36 months, that is the normal standard period of the execution.
Got it. And what is the typical outlook that you have currently on the overall project pipeline?
Apart from this, whatever the current order book we are talking about, 2,500 crore, we are already quite a bit competitive position. But what you can say that in terms of the bidding position is concerned, we are L1 for almost more than 1,000 to 1,200 crore or something like that. But we are expecting that once the LOI to be issued us on all these things, then we can go for the announcement. But we are fairly placed for whatever the target is concerned. We are fairly placed in terms of our target, and we are quite ahead of the target in terms of the order book consolidation is concerned. So if you talk about the outlook, seems very optimistic and bullish outlook we are seeing in terms of the order book pipeline and execution capability of us.
Okay. And could you tell us name of some of your, marquee clients in the past for which you've done projects, and also, clients in your pipeline?
See, currently, if you look at our order book, we are almost doing 75% from the government job and 25% of the selected private players and all these things. So in government, we are doing job from Airport Authority of India, we are doing for Bangalore Metro, we are doing for Mumbai Metro, we are doing for police housing, Pune and Mumbai put together. We did a good amount of job for Raipur PWD in terms of the developing the Raj Bhavan and the minister's accommodation and all these things. So And we are doing for PWD that medical college in Uttarakhand. So there is the major clientele for the government is concerned. In private, we are doing for Godrej, we are doing for Vedanta. These are the major client. And past also we did a lot of renowned private players such as BPTP. Then that time Sahara was also peak. We did for Sahara. We did for HDIL earlier days. So these are the major clienteles we have. And in industry also, we did a lot of IT for Gensar. And then hotel also we did for that Hyatt. So all the marquee client we have in terms of the wherever the structure is concerned, we are very specialists in any kind of civil structure. So a lot of marquee client we had on these aspects.
Okay. And generally there is a investor perception that of a company doing government projects, there could be challenges in working capital in terms of higher receivable days and all that. Have you ever come across that kind of situation, or rather do you foresee that kind of situation?
In terms of the cash flow and working capital is concerned for the government project, to be very honest with you, I never came across that kind of situation because whatever we are doing, mostly that supportive infrastructure, that is, be it hospital, be it airport terminal building, everything is a time-bound project. And the pressure is very much on us to complete the project on time. And as well as government is also supporting in terms of the cash flow is concerned, as and when due, there is not major any significant delay. Not eventually, it is only most of the payment is very timely manner. So we haven't came across but that, but we never experienced in terms of the cash flow is concerned for the government project. And the way the project is moving, all these things, we are not envisaging any that kind of situation in coming days also, as because the structure and transparency and everything is much more better. And in terms of the deliverable also, it is much more clear and very time bound. So we are not envisaging any working capital progress or any delay delay in payment way forward also.
That's good to hear. Imagine you run a taxi business. Instead of buying and owning cars and hiring drivers on a payroll, you can create an app where you simply connect drivers and passengers. You don't need to own cars or employ the drivers directly. An asset-light business model is a bit like that. It is a business that doesn't own a lot of things like land or even doesn't deploy finance to construct a building. Instead, it works with other companies who have those assets or things. Now, on the real estate side, you have an asset-light business model. So could you please elaborate how this works and what are its advantages?
So I think, what we have realized or, calibrated ourselves as a company from the management and the board to is that our strength is in design, execution, construction, sales. We have a strong brand in real estate, so sales and marketing. Now, real estate, however, has two other very important functions. One is land accumulation, and the second is financing, when and where needed. We, being a public company, we consciously decided that our focus to our shareholders would be to align ourselves to our strengths rather than deviate and concentrate funds and energy in a direction where we think others are better off playing the role. For example, land accumulation. We feel that we are better off focusing on construction rather than land accumulation, and so we leave that job to other aggregators who are capable of getting good parcels of land, and then we enter the mix after land is already accumulated and all the paperwork for the land is intact. We do our diligence and then we do a joint venture. So the land is brought to the table by, you can say, another equity partner. Every now and then, if a good amount of finance is needed to purchase, say, TDRs or approval costs before the project is launched, then we again look for an equity partner to come into the mix. And then our role, therefore, is the asset-light part, which is focusing on the launch, on the design of a good product, execution of a good product, sales and marketing. So I think we can, I keep saying this in some of our calls, we call our real estate model a glorified EPC, whereby we are primarily bringing the execution aspect of the project to the table. And so we are very conscious that we do not want our shareholders' funds to be blocked in land as an investment, or to be blocked in purchasing huge amounts of TDR wherever avoidable. We would rather use our funds towards construction, which is what we promise to our shareholders as our focus point.
Got it.
So I think we're very conscious. So we do not buy land. We do not. We stay away from investing on behalf of our shareholders in land.
Interesting. No, pretty interesting strategy, and probably scalable also, right?
Right, absolutely. So I mean, you have a very valid point there. So I mean, if we have 100 rupees and you put it in land, you can wait for 8-10 years and do one project. Whereas if we leave the land part to someone else, the same 100 rupees can churn us 5-7 projects over a period. So I think we are looking more at churning out more construction, delivering more projects, even if the margin per se is slightly lower than focusing on land. I mean, we all know that land can give you returns, but I think we look at that as an investment return, which our shareholders are very well capable of doing through their own, I mean, they know how to do it. So we don't have to play that role for them. What we bring to the table is construction expertise, which our shareholders don't have on their own. So I think we would rather use our equity in doing more projects and churning out more projects faster and moving on.
Interesting. And on the real estate side itself, what is the total sales value of the projects under development?
The project which is under pipeline, which is either launched or to be launched within a span of next 2-3 months or so, the total area is almost close to 1.6 million square feet, and expected top line is almost close to 1800 crore. And we are expecting the delivery within a horizon of 3 to 4 years. We are expecting the delivery to happen.
Got it. And what is the current debt on the balance sheet and average cost of this debt?
The current gross debt on the balance sheet is close to 165-170 crore, and net debt is around 50 crore. The average cost is almost 12.5% approximately.
Got it. And you said that you have this third division of GMP Technical Solutions. So what does this company do, and why does Vascon want to divest stake in it?
GMP Technical Solutions is also a form of an EPC company, actually, but they're totally different to what our core strengths are in terms of construction and construction in buildings. You could look at it in one way as sort of a backward integration or a forward integration, whereby they make clean room partitions, they make fire doors, and they also do HVAC execution primarily in pharma and hospital projects. Now, wherever we do these kind of projects, we do use them as our partners for these aspects whenever these scopes are within our purview. But so they are doing well. They are also growing steadily year on year, and that market itself for this kind of a business is growing, because not only does pharma need clean rooms today with the Make in India program, and a lot of industries, a lot of chip manufacturing companies, a lot of within the manufacturing industry, there's a huge demand for clean rooms. So GMP is also planning to enter those fields, and so in one way we see tremendous growth potential for the company. However, as I said, to do with land also. I mean, we all know land can be a great investment. You can triple your money in a short time in land if you do it rightly. But that is not our strength. Our strength, as far as our shareholders is concerned, is design, marketing, constructing a good project and delivering either to the government sector or to ourselves as real estate players. So I think the only reason we want to divest our stake in GMP and move on is because we view it as non-core. We are essentially at the end of the day investors. It is an excellent business. So when we get a reasonable price, we will exit and focus our funds again towards construction and delivering more projects. So we want to be very clear to our shareholders that what we bring to the table is our design, construction, sales, marketing expertise to do with buildings. So we do not want any confusion, in other aspects. So they could be good businesses, but we will leave it for someone else to play those games.
Correct. And, coming from an, investing background, I've generally seen that, investors do appreciate when companies have a sharp focus on what they can do the best.
Right.
Interesting. Now, very quickly moving on to the industry trends. what is the kind of CAGR that you expect on the EPC side, on the industry basis?
So the industry, I mean, I wouldn't be able to predict an exact number, but the industry looks extremely positive for 2, 3 reasons. One is the government sector over the last, 10, 12 years has really been putting up a lot more projects, both state governments and central governments. They've been a lot more organized, and they have been wanting to build a lot more housing, hospitals, and government buildings, all kind of government buildings. So that will continue to grow. And on the private side, real estate had been a bit subdued pre-corona, during corona. Now, I think there's a big impetus on real estate, on Make in India, industries coming in. The IT boom took a slight slowdown, I would say, because of the work from home culture that caught up. But now, if you talk to any IT companies, they are very bullish that, the future looks like, I mean, they need to be putting even more seats, even though they do expect 20-30% to be continuing to work from home. But they now see the demand is so high that the balance 70 working from office needs more square feet coming up pretty soon. So it looks like from all sides, we are going to be bombarded with potential buildings to be constructed. So I think we are in a good position where, again, we are not so huge that we have an extreme amount of pressure to keep booking orders to keep our story alive. We are fortunately in a phase where we can happily grow much higher than what the industry will grow, because we are starting with a lower denominator at this point of time. And so we can be picky and choosy about which projects we want to take and still outgrow the industry in terms of our growth.
Excellent. So let's say if the GDP grows by 6 to 7%, do you expect at least 10 to 12% industry growth rate?
Yes, I do.
Broadly.
Yes, and an even higher Vascon growth rate.
Excellent, excellent. And just last, very quickly, what could be the risk to this business?
So, see, there are a few risks we have seen in the past, we've experienced and learnt in terms of, we view risks as two angles, two aspects. One is which we need to be very conscious about and focus on internally, which is, our margins are thin in the EPC division. And typically to build a building, you need to place more than 1,500 orders for a single building. So now there are so many procurements that need to happen, and each of these has a price variation. We bid for a project and it takes 3 years to execute the project. So all these price variations, quantity variations, they need to be monitored live, on a weekly basis to see where we are heading. So one aspect of the risk is how are we aware of what's happening in each of our projects on a weekly basis? Do we have our MIS in place so that we course correct as fast as possible? And I think that we are focusing very much on. The other aspect of risk is, of course, we are working for the government sector. Politics does come into play. We don't know. So far, we are very focused on trying to take projects which are not extremely politically sensitive in terms of a single party's favorite project or something like that. These are generally hospitals or housing projects which a change in government would not generally affect the delivery of the project. So, so we try to ensure that we mitigate all these risks as much as possible. But having said that, of course, we are in business, there are risks. A project could get stalled if a government changes, a project could get stalled if the funding strategy from center to state changes. We are aware of these things. So what we do is we do not have a huge exposure on any project. We run each project independently from a separate bank account. And so whatever funding comes from that project goes back to that project. We believe our shareholders' funding is not here to fund someone else's project, be it a government sector or be it private sector. Certain aspects of risks like labor strength and internal controls in our risk metrics, we are aware that it is for us to internally focus on. And so those to a reasonable level of accuracy, we are able to control and monitor and ensure that we do not fall for those risks. And certain risks are industry risks, government changes or project, stoppages over a period of time. So for that, we ensure that we are exposed to various kinds of clients, various government departments, and so that, one or two projects getting into trouble will not really derail the company as such. And also within projects, we ensure that we have a bank account whereby the funds coming in from the project are used to run the project, and no external funding is generally used to fund the project as such. And therefore, at any point of time, we wouldn't have a huge outstanding that is due from the client. And so even if those risks were to pan out for us, I think the effect of those risks could be mitigated by these strategies.
Got it. So thank you, Mr. Santosh. Thank you, Mr. Somnath, for taking out time for this discussion, and really appreciate the way you've explained the company's business and the investment story. Again, many thanks.
Thank you.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.